I hear people recommending munis now when yields are already at a 38-year low. Before we get into the actually related to the recession question, I mean, look, state and local governments are poorly positioned to weather any kind of downturn. Are munis safe right here?
Well, right now, the relative value of munis in terms of the ratio of a muni yield to a treasury yield, they've all surged higher. It's the same idea as seeing wider spreads in high-yield corporate bonds, investment-grade corporate bonds, and it's mostly because treasuries are plummeting in yield. The plummeting treasury yields are reflecting rising risk of a recession. To your question about munis, in a relative sense, munis have gone from spending most of the prior 12 months sort of rich. They actually look sort of cheap right now. I do think munis look comparatively attractive.
Treasuries. Yeah, I mean, everything looks cheap relative to treasuries. I guess the question, though, is we know state and local governments have huge pension obligations. Plunging rates increases those obligations massively. It means they have to spend more money servicing that. They have less to spend on everything else. They might have to raise our taxes as a result. I'd love to get the triple tax exempt status that I can get, you know, in the yield I can get in munis. I'm just not sure I can trust my local authorities.
Well, I think if you were concerned about municipal credit quality, and if we do, in fact, end up in a recession, those concerns are going to become more evident in the market. But one thing that I think you're missing is that the muni market is overwhelmingly high quality, AA, AAA names. The fact that the discount rate on pension funding is plummeting, yes, that's a challenge. But pensions don't get paid off in a year. They get paid off over 10 to 30 years. You have the vast majority of American states in better shape now than they were 5 or 10 years ago. A recession will be challenging to munis, but more challenging to high-yield corporates, more challenging to BBB corporates. So in a relative sense, munis probably still offer safety despite the pension challenges you just mentioned.
We've got about 30 seconds. Are there slivers of the muni market that would be riskier than others? For example, airport authorities.
Well, right now in the market, you are seeing the reaction to the evident plummeting in demand for travel. As a result, airport-related municipal bonds are, in fact, underperforming. I think it's safe to say that the drastic move in bond markets are forecasting higher risk of recession. I don't know if it's a fait accompli, that we know it's going to happen. I do think it's prudent as an investor to remain in fixed income in these difficult times, given the volatility in stocks.